Hi, hello everyone. Welcome. Feras Riyal here with Remax at Team Feras Riyal. Thank you for joining us today. We have a wonderful session coming up. Today we'll be discussing mortgages, and our host for today is my guest speaker has worked with RBC for over 15 years and has gained valuable experience working with one of Canada's most trusted organizations. Ahmad is extremely knowledgeable and truly cares about his clients and helping them achieve their goals, especially when coming to getting a mortgage. Buying a home is a big decision, and Ahmad is definitely the person you want on your side when making these decisions. Today, we'll be discussing everything about mortgages, from pre-approval and post-approval, and what to expect during this process. Please welcome RBC mortgage specialist, Ahmad Omar. Thank you, Ahmad.
Thank you, Feras. That's a very good intro. I'm very excited. Thank you for having me today. So just a little bit about myself. I've been with the Royal Bank for 15 years now. I have done different types of roles. So I am a mortgage specialist in the GTA area. And yeah, I'm very excited to discuss mortgages and home ownership and how we can help our viewers today. I'm very excited.
Thank you. Thank you for taking the time and joining us today. The mortgage, as you know, it's a very wide, area. A lot of questions have poured in, and we're gonna be discussing them. Hopefully, we'll try and answer all the questions as much as we can. I would just want to make sure that if anyone is having any questions, they can post it in the chat. We're streaming live from Facebook, so you can let us know if you have any questions. Drop them in the chat. Let us know where you're calling from or joining us from, your location, and don't forget, keep your turning on your notifications on so that you can always have access to such live webinars. And so Ahmed, quickly, just what advice would you give? Let's talk about now first-time home buyers, buyers that are planning to buy their first home. What advice would you give them, before going or thinking about mortgage? So like I know a lot of buyers, like they go and buy a car, for example, or lease or finance a car before jumping, to getting a home, or they get a line of credit, or they increase their debt on the credit card. So what advice would you have for them, for especially first-time home buyers?
Good. That's a very good question. I do work with many first-home buyers, whether they're new to the country or they're just on the come up. So there's a lot of information that they need to know. I mean, it's an easy process if you're working with the professionals. And what I mean by that is having expectation, knowing what you're getting into. What are the ongoing costs? So the main thing when I meet the clients for the first time, we want to understand how much can you afford. I think that's kind of the main thing. Clients, they might be interested in buying a detached home or a semi, but depending on their qualification, right? How much they're able to qualify. So the key thing is we sit down, we look at the numbers. So first thing is how much can I afford? Before you even start looking for a home, you need to exactly know what kind of home you're looking forward to. I think that's key, first of all, because of the expectation. When we're working with a realtor like yourself, you want to know what to help the client with. Because, and I tell the clients, like it's to their advantage. They don't want to be looking for let's say a detached when they can only really afford maybe a semi, or they don't want to be stretched out in that way. So that's kind of key, planning ahead. Now, some clients, they need a detached or a semi. They have maybe 3 or 4 kids. They don't really want to live in a condo, a 1-bedroom or 2-bedroom. Okay, so let's plan ahead. What needs to be done to get to those goals? Do you need to maybe add another applicant? Maybe put down more down payment. Maybe some debts that you need to be paying off. So, and that's the goal when you're working with a mortgage specialist. They will provide you that options, knowing, okay, maybe I'm not there yet now. How can I get there? What's my goals? So when I come back, I am ready to go and search for a home. So I think the key thing for first-time home or any buyers actually is being pre-approved. That's very key, especially more than ever in today's market, because you want to know how much you can afford. You wanna, when you're looking for a house, it's an exciting time. I always tell first-time home buyers or any buyers that this is very exciting. You want to have fun. You don't want it can be stressful, but if you are ready, if you are doing your due diligence and you're working closely with the realtor and the mortgage specialist, this could be an expected process because you already done so. You already had the expectation. You know where you're landing, so it's the expectation should be there and the results should be there because you already went through this. You already know what the budget is, plus minus in that range, down payment, what needs to be done to get there. And then searching for a home, and that's where you come in, where you already know what the client wants. You guys already know the numbers. So when you're looking for a home, you know that range. So you want to have less disappointment. It's a good client experience when the client already knows from A to Z what he's getting into, and it's fun. It's especially for the client. It's when it's his first home, it has to be that nice experience, right? It has to be a smooth transaction, I say. So you don't want surprises. If there's any surprises, that means the mortgage specialist or the realtor didn't really do their job where the client exactly knew what's going on. Whether even if they need to buy detached and they're not there yet, or a semi or whatever the area, they know what needs to be there. What's my options? So there's no surprises. So there's a lot of things. And I always recommend first-time home buyers, you want to know about mortgages. You want to learn. Everything is online. There's a lot of information, whether it's on RBC website or other websites. So you understand what benefits you, So when it comes to the home buying process, the more knowledge you know, the better for you to understand the mortgage that you need and what needs to be done. Because getting a mortgage is one thing, but knowing your payments, like if you can qualify for that mortgage, but I always tell people, depending on your lifestyle, if you are getting a mortgage 500, 600,000, how is your lifestyle? Because it could be different than the next person, whether your kids go piano lessons or you go a lot of vacationing. So understanding that part, I think it's key for some home buyers so they understand the whole process.
Thank you. Thanks for, so it does take a lot of planning and pre-planning for, especially for first-time home buyers. Agree totally. And a question I have for you here is, what's the difference between being pre-qualified and pre-approved?
Okay, so that's a very good question. I'm sure you hear that a lot. Even clients, when they call me, they tell me, I've been pre-qualified for 900,000, or I've been pre-approved. So there is two key differences between them. One is pre-qualified means you done maybe an online calculator, or you had a brief discussion with a mortgage specialist or the realtor where they might do like a simple equation for you. Okay, you can qualify in that range, but there's much more to that. There's when it comes to pre-approval, that's when we actually check the income, we do a credit check, and also, which I think is key, you lock in your rate. When you pre-qualify someone, it could be like a 5-minute conversation where, okay, you're making XYZ, you're putting a down payment, yeah, you're in that range, but you don't know, does the client have other properties? Does the client have a car loan, $700 a month maybe? Does he have bad credit? Wife, is she working? Are they getting child support? Maybe you can qualify for more than that. It's an investment property. Maybe we can use the market rent towards that. So I think a pre-approval is more, because it's more concrete, and I think that's more important than ever, because right now a lot of, as a lot of the deals are in the transaction with a firm. There's no guessing, right? It's either can you afford it or no. So I think being pre-approved, think of it as like a compass. You know what I mean? It's you verify the income. We look at the whole holistic point of view, and we see the client. Okay, he can qualify for 900. No, there's no guessing. You are pre-approved by the bank. You can go to the realtor and tell him, hey, I have a pre-approval here. Let's go. We can go firm, or subject obviously whether it's insured or the appraisal. But where you stand. There's no guessing. And that's where the surprises come in. I find a lot where clients will call me, hey, I spoke to this broker, or I spoke to this, mortgage specialist, or my friend, he says, hey, for sure I can get 900,000. Okay, but look at the numbers, and sometimes where the client's like, surprised, are you self-employed? What kind of income are we using? Don't forget, now it's because of COVID guidelines. There's a lot of temporary guidelines that, the banks go with now. So they're a little bit tighter with their lending, depending on your job, how, especially that goes for the self-employed, what type of income you're in, what type of business you're in. Is it a high risk, a low risk? So that's one important thing, the qualification, because it makes it legit. It's pretty much between, gray and white, and that's it. That's where I stand. The second key thing with pre-approval, you get to lock in your rate, which I think that's kind of key as well. That's like half of the most important thing of being pre-approved. Rates now, historical lows, great time to lock in your rate. But at least in case rates go up, you never know. I always tell clients and realtors, last year around November 2019, we were at 3.something, 3.39, 3.29, and it was trending. Like even the conferences I was attending, they were saying rates is going to be around 3.6 range. and then the whole pandemic started and the rates start going down. So being pre-approved, I think, is key because you know where you stand in terms of qualification, and also you lock in your rate. You want to be ahead of the game, and I find most clients that are winners are the ones that lock in the rate, because now you have an advantage. You can lock in the rate for 120 days. That's what most banks are able to do. So you have an advantage. You guaranteed yourself this rate in case rates go up. Now, if rates do go down to whatever reason, you also get the lower rate. So you're kind of like,
win situation. So locking the rate, even if the rates go down, you can still get the lower rate, and if it goes up, you still get the lower rate. So yeah,
absolutely,
that's a very good thing to.
Absolutely. I think that's kind of key, because okay, at least I'm getting these rates if I buy in the next 4 months. If the rates go down with RBC, yes, you'll automatically get the lower rate. So that's kind of key, important as well. Because again, you want to be prepared. The whole thing is you want to be prepared, so there's no guessing. That gives you the best chance to succeed and to land the house that you want.
Excellent. Thank you for sharing this. And so question I have here is, what does the lender look at when qualifying someone for a mortgage? What are the key things that they consider?
Okay. So usually when banks or lenders, they look at 4 main things. Income. What does a client do for a living? How is he going to make these payments? Is he self-employed? Is he employed? Is the wife employed, or the partner? How much are they making combined income? The second thing is credit history, credit patterns. How is the client making his previous payments, whether it's a mortgage, a loan, even if it's a phone bill. So this is kind of key. A lot of clients, I feel they underestimate this, where, hey, I'm making 160,000, I'm good. I've seen clients where they're making good income, but they still don't qualify with an A rate because of their credit history, because of that Kudo bill, or that Home Depot credit card where it went to a collection, and the bank see that, okay, this guy has a bad paying pattern. If he can't even make his car loan, or he went to collection, how can he able to make the mortgage payment? Even though he can and the income is there. But now we have to justify to the lender, it brings more headaches where we have to give exceptions or mitigate it, where it's just a simple, bill payment that he had to do, or whatever, property tax, etc. The third thing they look for is down payment. How much is a client putting? The more you put down, the easier for you to qualify, because it's a lower mortgage that you need. Are you putting 20% versus 5 or less than 20%? That's kind of key as well. The more you put, obviously the more mortgage you will qualify for. And also you have the option where when you put 20% or more, you're able to choose between 25-year amortization or 30-year amortization. That's the life of the mortgage. If you are putting less than 25%, your only option is 25 years. And it makes a difference, because when you do 30 years, you tend to qualify for more, because now you are paying the mortgage in 30 years instead of 25. That means your payments will be lower. That means you will qualify for more.
So that's 25% or less than more than 20% or more than 25% to get the 30-year option?
20%. If you put more than 20%, you have the option to choose either 25-year amortization or a 30-year amortization.
Right. Okay.
And the fourth thing is the property. The type of property. Is it good? Is it a farm, or is it like a cottage? Is there anything wrong with the property itself? The appraisal. So that comes down with when we do like an appraisal and such. I mean, appraisal has been going good right now, especially in the GTA. Nothing really is coming low, because it's a hot market right now. But I think the main thing is income, down payment, and credit. These are, I think, the key components.
Okay. Thanks. So let's talk about now the buyer, applies for the mortgage and he gets pre-approved. So what's the next step? What's the next step for them after getting the pre-approval for a home mortgage?
Okay. So that's good. So after we verify the income, we do a credit check, we submit it to the underwriters, and let's say we approve the client for 900,000. Amazing. So now he can go to yourself and tell you, okay, I've been pre-approved by the Royal Bank. I have a pre-approval here. We can start looking for 900,000 or in that range. So that's I think the key component now, where it's important to work with the realtor and the mortgage specialist, because it doesn't just end there. As you know, a lot of deals and a lot of houses are going above asking. There's multiple offers, bidding war, etc. So I think, especially with the realtor and the mortgage specialist working closely together is important, because and that's, when even me and yourself, when you have these questions, it's like, okay, we're pre-approved for 900, but this property might go 930, let's say, maybe 950. That's, when the expertise, are we able to give an exception for this client? Can he maybe need to put a little bit down more, maybe pay off a credit card, or add another applicant if it's the extreme measures. If it's maybe 30, 50,000, yes, we are able to give exceptions on that based on, and again, it comes down to the client's credit history. If client's credit history is good, down payment is good, we are able to ask that, because the underwriter will provide that. They are generous, they want to give the approval, but we got to mitigate the risk. But if we're asking for an exception 50,000, and this guy is bill or car loan, he's been behind, he's not really make his payment, it'll be tougher. So I think the key thing is, once you're pre-approved, knowing that limit. Okay, so let's say we might go for 930. Is it doable? Can it be done? What needs to be done? So I think that's kind of important as well, where that working relation with the client, the mortgage specialist, and the realtor ongoing till pretty much the offer gets accepted. Because a lot of people, I find, they lose chances where the client will show the realtor, okay, I'm pre-approved for, let's say, 900, and that's it. They're looking at 900 max. Anything below, let's stop. Which is wrong. Banks are giving exceptions. RBC is good with that, depending on the client's, level of risk and how good he is with making payment history and his down payment. So you look at it different ways. You know what I mean? But I think that's kind of key, where you don't just stop there. Banks are giving exceptions depending on how strict the client is, and then that's where the relationship needs to be done. That's where the mortgage specialist and the client are going back. Okay, I might like this. I might go 950. What needs to be done? How can we get it done there? If it's 150 or 200,000 over, that's a little bit tough. You might need to add more down payment to add another applicant. But no, it's important, because a lot of things are going over. 799 listing doesn't go for 799. It's going for 8, 9, maybe 950 even in some areas. So I think that's kind of important for sure.
Okay, thank you. And so I have another question here. The applicant has a good credit score. They have no credit card debt, no car loans. The only thing they have is an OSAP loan. Do they have to pay off the OSAP before applying for a mortgage, or can they still get pre-approved with that OSAP loan?
Yeah, they can get pre-approved. OSAP, we see it just like another loan, like a car loan or a student loan or a medical loan or whatever. It depending, that comes in part of the qualification. How big is your student loan? What's the monthly payment on it? When is it going to be done? That's kind of important as well. But it is treated like because you're making your monthly payment on it. Are you even making monthly payment? Because some student loans, the clients don't need to make a monthly payment until they graduate or until they find a job, etc. So no, they can get pre-approved.
So it's just like any other debt they have, like a credit card or a car that's being financed or leased.
That's correct. Yes, I would treat it just like any other loan. Yes.
So one here. Okay, so how long does it take to complete a mortgage transaction?
Okay, so I would say usually takes 3 to 5 business days if it's a one-touch approval. It's easier and quicker when the client's already pre-approved, because now we're simply converting the pre-approval to a purchase. We're just adding just the subject property now, the MLS and the sale agreement. If it's a one-touch approval, yes, we are efficient. RBC, we can have a turnaround time, within even 3 business days if it's a one-touch approval. But depending on the client, right? Depending, is he self-employed? Are we using stated income? It depends on the comp. Is it investment property? Is it his 5th, his 6th? But usually, if it's a first-time home buyer, yeah, we can get a decision quickly. Maybe even sooner. Being pre-approved helps you with that. It does expedite the process because everything's already in place. We already did the income check, we already did the credit check. Now we're just converting the pre-approval to a purchase and submitting it for the underwriter. So sometimes, even to be honest, even within a day, we can get a decision.
And it helps you, of course, when you're putting an offer on a property. You have a pre-approval. Definitely, you're going to have an advantage, or the seller is going to take you more seriously. And when you have a pre-approval, like you said, the process is less. So instead of putting a finance condition maybe for 5-6 days, you probably go you put a condition for maybe 3 days.
Yeah. You might even waive it if it's already pre-approved for, like, let's say 800 and you're going for 820. You are able to. It's only 20K, right, for the purchase price itself. So mortgage might even be only maybe 60,000 you're asking for. So again, you have that confidence because you are working with a realtor, you are working with a mortgage specialist. You know where you stand.
And so, how's the rate environment today?
So rates are great. I mean, there are historical lows right now. We're looking at the 1.5 range in the variable, so some even lower. So rates are good. Rates is definitely an advantage for clients to take advantage of right now. You know, I always tell clients and realtors compared to last year, yes, house prices are up. You know, the market is up. You know, 100, 150,000, or whatever the case be. But because of the rate difference between now and last year, it actually might even be better for you to buy today based on these low rates. You know, I was explaining earlier last year or November 2019, December rates were at 3-point range, you know, 3.39, 3.4. Now you're looking at 1.6, 1.7, 1.5 even. So big difference. You're talking about almost more than half of the rate. So your payments are lower, means you're paying more towards the principal. So huge advantage. You know, I created a chart. I was showing it to you where, you know, clients that purchased the same home, same property, same everything, and they bought it, let's say in November of last year, 2020, versus the year before, even if they paid 100,000 more, same everything, same property, same mortgage, same down payment, they are better off than the person who bought it 100,000 less, 120, because of the rate. They're
So in
making less.
other words, despite the rate increase in the home prices, for as you know, I looked at briefly the numbers, and I found out that despite the increase of let's say 10% on your on the house, let's say a house that you bought for $1 million and today is 1.1. Because of the lower rates, you are still getting a 10% less payment, monthly payment on the mortgage. And I think that is why it's encouraging a lot of buyers to go out there and shop for homes because of this historically low interest rates we have today. Yes, prices of homes are increasing, but if you look at it number-wise, or monthly on your mortgage monthly payments are still lower than last year. So interesting.
100%, 100%. Just to show an example, you know, I don't want to go too much into it, but the chart I created, this is as of January, like range, but let's say a client in December of 2019 purchased a house for, let's say 838, you know, in that range, 840. His monthly payment would have been approximately 2,900. Same client, if he bought it in December of 2020, so, you know, a few months ago, let's say it went up 100,000, you know, 940, 950 range. His payment would be actually less by almost $250, $300 a month, less. So he bought 100,000 more, same down payment, same everything, same house, you know, almost $300 less a month. His principal, so the guy who bought it 100,000 more, his principal is almost 28,000 better than the other person towards it. So at these two individuals, after 5 years, the guy who bought 100,000 more, even though because he got the lower rate, of course, he is paying 28,000 approximately more towards his principal versus the guy who bought it lower. The individual who bought it in December 2020, so the guy who bought it at more, is paying almost 40K less in interest in that 5-year span.
Wow.
Yeah, huge advantage. I mean, when I show them this, they realize, okay, yes, house, you know, because a lot of clients, they tell you this, oh, house prices are more expensive, I want to wait. But when you show them these numbers, they realize, okay, you know what? Yeah, house prices are up, but man, these rates are amazing. These are historical lows. Like I tell clients, take advantage. It's not going to be here forever. This is because of the pandemic. You know, once things get back to normal, we're going to be looking at 3-point range, I believe, just like what we were before, you know, which is still kind of low compared to before. Like even in the 2.5, 2.6, 2.99, these rates are not really expensive for a mortgage, you know, compared to other even countries.
Yeah, even B-lender rates are lower today than
Yes.
last year's rates. I know you were speaking to me the other day that their B-lender is for as low as 2.5, correct?
Yeah. That's how much the A-lenders were last year, more. So
Exactly.
no, it's good to buy based on the rates. Like, you know, take advantage. I tell clients that. And that's why a lot of people are also refinancing their mortgage, you know, breaking their mortgage, getting into a new rate. So a lot of my clients are even paying a penalty, you know, but it makes sense because they are reducing their payments much lower. So that's kind of key as well, for sure.
Okay, a question I have here is when someone is like, they're not a first-time home buyer. Obviously, they have a home they own and they have equity now and they want to refinance. Do they have to apply from scratch? Like, is it a new mortgage application, or how's the process for refinance?
Yes. For the most part, yes, we do have to requalify them because they're asking for new money. So let's say we qualified them before, at 500,000 mortgage, and now they need 600. We do need to qualify them out because they're asking for new money. We have to. It's better for them as well because we're reassessing their house. The appraisal comes back. For the most part, RBC pays for that. But yeah, we would need to qualify them because they're asking for new money now.
So speaking of appraisal, when someone has equity and the bank does a home appraisal, let's say the actual equity is around 200,000. So does the bank consider all this amount, or they take like a percentage of that?
Yes. So most banks, they give loan to value of up to 80%.
80%.
For 80%. So let's say a house is worth $1 million. Appraisal comes back as $1 million. You can go up to 800,000. Conventional. Will the client get that amount? It depends now. And I think that's a tricky part with a lot of my clients. They tell me, hey, my house is worth $1 million. I only have 200. I want, another 600,000. You are able to, but again, it comes back to qualification. How much income are you earning? A client, let's say he bought the house 5 years ago, 10 years ago, low, and he's only making, let's say, 60,000. He can't get 800,000 on a mortgage. Even if his house is worth 200 million. I mean, 2 million. Again, it comes back to your because we're qualifying you for that amount, for that new mortgage money.
Question, what programs do RBC have for the different types of situations and different clients? Any specific programs you're running now?
For sure, most definitely. I mean, that's something RBC is big at, and I do consider us one of the best, actually. We do have many great programs that can benefit the client because, let's face it, a lot of clients fit in different kinds of, bucket is what I say. Whether it's our medical dental program. So that's something RBC is very good at for medical students and for dental programs. So we give, good financing options to purchase the real estate, even if they are students. And even if they are studying under the residency program, even up to 3 years. This is a very big program we have where, let's say the client just became a doctor or they're under their residency, so they're students, and they're only getting paid, let's say 50,000 right now, right? But with RBC, we do see the value. This client, he is going to be a dentist or a doctor, and he is going to be making a big amount. We use projected income for these kind of clients. So we can go up to even 200,000, 225,000 income annual for a client, even though he's making only 50,000, but they do fit under that category.
So what are the professions that RBC considers a projected income?
So for dental and for doctors, we use income around the 200, 225 range for them.
Okay, even though
projected
they're
income.
not making that amount, right? So
yes,
already projects that they will be getting this income, so they qualify them based on that projected income.
That's right. Even up to 3 years. So that's a dentist just became one right now, and he's working. He's on the come up, and he's only making. He's working on another profession. He's making 50K, 60K. RBC can go up to that high. Yes.
Okay.
That's a huge advantage. That's one of our best mortgage programs, where because we are using projected income. Another RBC program that's very good, compared to others, is our self-employed income. So, a lot of clients are self-employed. They are small business owners, or, whether they're into sales or, they own their own businesses, or they're in transportation, etc. Obviously, we know that they claim less, under T1 General when they claim it, tax purposes, etc. So we do know that. We do know the client is making much more than this. Client could be grossing 150, 200,000, but he's only putting 40,000 on his income, right? So, with RBC, we are able to use the gross amount. As long as the client is putting, depending on the program, he could put 35%, where we can qualify him based on what he's really making, even though he is saying he is only making 40,000. That's something we're very good at, actually, because other banks, either they use the 40,000 or they might gross up the client for 15%. But with RBC, we're able to use almost the whole gross, as long as obviously we show that, the client is making deposits, he is making that amount. He's just claiming less for tax purposes, which is very normal for a self-employed client. But this is a very good program. We do a lot of clients we deal with because of that program, where they can take advantage of it.
Excellent.
We have other programs as well. Again, you can have a client that's not working. He is retired, but he has a good amount of money. He has good savings, or he sold his house, or he has inheritance. Just because he's not earning any income, we qualify him under a different program. We have something called the Wealth Accumulator program, where the client has, let's say 800,000 savings or into his liquid assets or stocks, etc. He doesn't necessarily need to be working. As long as he can show us that he does have the savings, we can qualify him for a mortgage with almost zero income, just with his pension. Even if he's getting 2,000 a month, but he has good savings, as long as it's the same amount as the mortgage itself he's getting, we can able to get him a mortgage for that. Foreign income, we have a foreign income program as well. Clients are working overseas, they continue to generate income, or they have wealth outside of Canada. As long as they're Canadians, we do that. So a lot of clients, they work in Qatar or Kuwait or in England, etc., India. We can able to get them a mortgage based on that program, so they don't have to be really here. We do investment properties. So with RBC, you are able to get a maximum of 9 properties financed, whether free or clear, and we are able to qualify. We have other programs as well. These are just some of the few. The good thing is these are all A rates. You get, it's not like a different rate now just because you're buying investment property. I know some other lenders do that where, it's not your primary, the rates are different, or okay, you're doing this, or a newcomer is different. So these are all the same rates that you get. So even if you're buying a second or a third property with RBC, you still get these low rates. There's a program that we have, I talked to you about it as well, where we have something called as well alternative solution. So this is an extension of RBC's mortgage program where, in case clients don't qualify with us for whatever reason, we do have a program underneath us where they don't meet our RBC lending criteria, but we are able to still give them a mortgage. The rate might be a little bit higher because whether bad credit or low down payment or their qualification is higher, and we bring them back to RBC after a year. So there is options that we have for the client. At the end of the day, it's making sure the client knows his options, so there is no surprises. We do cottages, we do second homes, so many different programs, and that's why it's good. When you discuss with the client, you find out that he does have an option where he thought he didn't. And I hear that a lot where clients will talk to the neighbor or their friends and like, oh, okay, you're not making income. It's tough for you. You need to make income, or you need to be working here, or et cetera, et cetera. But when you talk to professionals, you realize, oh, I do have an option. I do have net worth with this. I can maybe get a mortgage just with the $2,000 pension. And a lot of clients get surprised because, traditional mortgages are different now. There's a lot of different programs that fit different criteria. Let's face it, we're all not the same, right? Everyone's getting source of income or different income differently.
Excellent information, valuable information. I love these programs. And in fact, there were some programs that I didn't know about. It's good to know.
There you go.
But just wanted to remind our viewers, if they are liking this, please say yes in the chat. If you have any questions, please post them in the chat. We'll be happy to answer them. And we did have some technical issues in the first few minutes, Ahmed. So I'm gonna allow me to repeat one question which we started our session with, and that's in regards to first-time home buyers. I'm gonna ask it to you one more time for those that missed the response. What advice do you give for a first-time home buyer who is looking to get their first mortgage?
For sure. So the first step before you even start looking for a home, before you even contact, you want to know how much you can afford. How much can I afford? What am I looking at? That's the first thing I ask a client right when they call me. What's your expectation? What are you looking for? What's your vision? Whether are you looking to buy a condo downtown? Are you looking to buy a semi, detached, depending on your situations, right? So the first thing is you need to know exactly how much can I afford, and that's kind of key, essential, where the expectation comes in, because a lot of clients they want something, but are they able to do it, or how can we get there? So I think that's kind of the main thing, where it's not like you tell the client, okay, that's it, it's off. It's more of an education piece. We're educating the clients. I think that's kind of important in today's market, where you want the client to know how much can I afford, planning ahead, what needs to be done. So a client might want it detached, but he can only qualify for a semi. Okay, so some clients are like, okay, I need to be reasonable with my expectations. Some clients, they can't move into a condo. They have 3 kids, 4 kids. I can't. I need to be in a semi or a detached home. Okay, what needs to be done? How can we get this done? How can we qualify you for that amount? Do you need to move further away from the city because the prices are lower usually outside the city? Okay, do you need to add another applicant maybe? What type of income do you have? Can you put more down payment? So with these, at least the client can walk away, okay, maybe I'm not ready to buy today, but hey, I know my options. I know what to work towards those goals. So that helps them a lot, because a lot of clients, I feel like they are, once you tell them no, they are lost. That's it. let's go back to renting for 2-3 years, where you might need to be renting for a year or so, but at least you know what's my goals, you know, what needs to be done, how can I get it done. You know, I can go back to my remote specialist, touch base with a lot of clients. I meet them even from 2 years, 3 years back, and you know, so it's not like, okay, I can't help you now, that's it. No, it's like a work in progress. They call me every 3-4 months. Okay, we paid off these credit cards, or you know, I saved up another 30,000. Am I close to there? What needs to be done? So I think pre-qualified, I mean pre-approved is the main thing for a first-time home buyer or any buyer. You know, that's my recommendation in general, because then it gives you that peace of mind. It gives you that knowledge. Okay, I can afford this much. What needs to be to afford that much? And then, you know, and the first thing I explained when we first started is this has to be a good client experience. It has to be a fun experience. I always tell the clients, you want to have fun. It can seem stressful, but if you know what you're doing and you have your expectation and you're working closely with your mortgage specialist, this could be, you know, you're buying your first home. It has to be exciting. You have to have fun when you're looking for a home. You know, there's no you're scared, oh, am I going to qualify for this? Or you're looking with the realtor, you know, the realtor doesn't know where you at, how much am I pre-approved, you want to know. So everyone's on the same page. Okay, we know we're looking at the 800, 900 range. Let's look at those houses. So there's no surprises. You're looking at the houses you want, you know, that can qualify for these houses. This is fun. You know, you're going with your husband or your wife or your kids, you know, you're in that range. It's not like, the worst thing I tell someone is you don't want to fall in love with a house and you're not even kind of afford it. That's kind of bad. You know, that's not a good client experience. So exactly. I think you wanna know where you're going. You know, you want to have that expectation where, you know, like there shouldn't be any surprise. I always tell clients when they call me, they tell me I spoke to this other mortgage specialist or the other bank and there was a surprise, or had, you know, I hear horror stories where on the closing date the client tells me that his mortgage specialist from his previous sale told him last day, you have to pay off your car loan 20,000. Or you have to put down 35%. So imagine you're closing your house, you're excited. Closing date is like tomorrow, and the mortgage specialist or the lawyer is telling you, hey, you have to put down another 30K, or you have to pay off this car loan. There shouldn't be any surprises. Like, you know, with my client, there's no surprises. That's why you give them the expectation from the get-go. They appreciate that, you know. And I find some mortgage specialists or they leave that for later, like, yeah, don't worry about it. You can qualify, everything's good. But no, you got to give them that expectation. And I feel that's my success rate versus others is, I give them the go from the beginning. Okay, you can afford it. Let's find out what you can do. How can you get done? So the client, there's no surprises. And I always tell people there shouldn't be any surprises. You know, the realtor should be knowing where the client's looking at because he's pre-approved. And, you know, the mortgage specialist told them how it's expectation. So the realtor can help them properly. You know, when you're looking for a house for your client, you know, let's look in that bubble. You know, let's look in that range. So when the house, you don't get it, it's not like, oh, it's a realtor's fault or the mortgage specialist's fault, I couldn't qualify. No, it's, you know what you're at, you know what the area you're looking at, and you're not wasting your time, you know, the client's time, the realtor's time, because you're all on the same page. You know, time is valuable, you know, especially now with COVID, you know, it's very limited when you're able to go see houses, etc. So the client, when he's near it on those houses, it's better for him for sure.
Yeah, so the pre-approval, it's the first step, it's the most important step. That especially, you know, the home buyers need to do, and like you said, you know, their expectations might be high, and especially with the prices, you know, increasing, they had, you know, their mind on a detached, but in today's market with their approval, they probably won't get anything, maybe a semi. So it's good to have pre-approved, know exactly what you can afford, and start shopping in that. And some people maybe they have to, you know, instead of maybe going to a detached in a certain area, maybe they have to consider different areas for them to get what they want. Like either they go to a semi, or maybe, okay, let's go find a detached in another area or location. So yeah, that's a very important step, and it's always the first step we encourage buyers to do.
Oh, 100%. I always tell clients and realtors, if you're not pre-approved, you're wasting your time. You know, 100%. You know, when a client or a realtor tells me if he's not pre-approved, the client's wasting his time, because you don't know, right? You don't know how much you can qualify. You don't know what's going on in the market. You know, you don't know what type of income. You know, especially with COVID right now, you want to be pre-approved. You want to lock in these rates
for everyone.
Yeah, 100%. No, you need to be pre-approved, especially in today's market, because a lot of times you're going firm. How can you go firm where you're not pre-approved? You don't know where you're at. You know, you don't know how much can I qualify for. So, and like you said, sometimes, you know, clients from before, they think houses are etc., which they're not now. They're lower. So you need to know, okay, am I able to, you know, do I need to move to a semi or a townhouse, or do I need to move? No, 100%. I think that's this whole meeting that we're having. I think the main thing is you want to be pre-approved. That's the compass right there. Otherwise, you're in the dark. You're just looking around in the dark. You want to know your budget as well. How much are my mortgage payments going to look like? What's my monthly looking like? Does that make sense? Because there's a few other things. There's ongoing costs and there's closing costs, right? Closing costs is there's like a down payment, when you meet with a lawyer, the land transfer, lawyer fees, etc. There's ongoing costs. Some clients, there's a property tax bill you got to pay now. There's the hydro, heat, etc. Title insurance, condo fees if it's a condo, or it's a little townhouse. So it's good to know these things, because the more knowledgeable you are, there's no surprises for you, and it helps you out. Especially in today's market, you want to have that power where you can make a good decision. I always tell the clients that you want to have all the information with you so you can make a wise decision, because you might realize, hey, I don't need a 4-bedroom. Why do I need to pay $5,000 a month where I can just get a similar size and the payments are less? If everyone has a room, finished basement, separate, it's such a way it could be. So I think the more as a first time, or even just a regular buy, there's a lot of different situation for even someone who's upgrading, whether it's a bigger house that you want, or a change of scenery, you want to go to a different area, switching your mortgage, can I port my mortgage? Having these discussions is key. You don't want to be guessing. Oh, I heard, I hear that a lot with clients is, someone was telling me I can afford this, or, I got this much, or no, but everyone's unique. Everyone's different. You might get more, you might get less, you might get, depending on the situation. So I think having that close relation with your mortgage specialist is very important.
Definitely. Thank you so much, Omar, for sharing all this information. And just want to remind the viewers that you can reach out to Ahmad through his email. If you can give us your contact, Ahmad, so that the viewers, if they want to reach out to you, what's your best email address?
For sure. So I can reach so it's very easy. It's ahmad.omar or rbc.com. So it's my first name dot last name at rbc.com. You can contact me anytime, 647-524-7722. I'm very active on Facebook, LinkedIn, Instagram. You can find me any of those under AO RBC Mortgages. And just give me a call anytime. Even if you're looking to buy down the line, whether you want to discuss my option, what's my take. I do this for a living. I help a lot of first-time home buyers or second-time buyers or investors. So I can give you my take, and yeah, we'll see how we can help you. Sometimes it doesn't make sense, whether even you want to switch your mortgage to RBC or you buy, and I'll tell you what needs to be done. What's your option? So at least you walk away like, okay, at least I know where to go from now. So no, I'd love to assist you, and that's what we're here for, right? We're the professionals, and I've been doing this for a while, and I want to help clients, get approved as much as I can.
Thank you very much. Appreciate it. So a question I have here is about mortgage insurance. What is mortgage insurance?
Okay, that's a very good question. So mortgage insurance is essentially for clients that are putting a down payment less than 20%. So for a client that's putting 5%, so with Canada, the minimum is 5% to qualify for mortgage. I know a lot of people even tell me, hey, is the minimum 20%? Or I heard, I have to put 20% or more. No, the minimum is 5%. It changes as your mortgage goes up, but essentially it's 5% to qualify for mortgage under 500 purchase price, and the more it might be 10%. So let's say you are looking to purchase a house and it's less than 20%. There's something called mortgage default insurance. So this is required by the Canadian government when a home buyer is putting less than 20% to qualify for mortgage. This type of insurance is just to mitigate, most banks and lenders for losses, in case mortgage default happens or whatever. So it gets added to the mortgage. You don't pay this up front. It gets added part of the mortgage. It's usually 3 to 4% of the purchase price, where it gets added to the mortgage and it's part of your lump sum payments.
Okay, good. So the 5% is for the first 500,000, correct?
That's correct. So first 500,000 is 5%. After that is 10%. So from 500,000 to $1 million, it's 10%. And anything above $1 million is 20%. So let's say you're buying, let's say $700,000 house. You would need to put down 45,000. The first 500,000 is 25,000, and the remaining, 200,000 difference, which is 10% of 20, which is 45,000.
But once you cross the $1 million, that's when the minimum would be 20%, correct?
That's correct. Yes.
Okay.
Yes.
So I am just going through some questions here. I have a question here. Okay, it's pretty much the same in terms of down payment. How much money do I need for a down payment? Can I use gifted as a down payment?
Yes, good question. So yes, you are able to use gifted funds as a source of your down payment. So let's say whether it's from a family member or a relative where you need an extra 20,000, or they're helping you with a full down payment, or a portion of it to make it 20%. That happens a lot where the client is only able to put 20, but they would like to put 20% to avoid that default insurance fee. So a lot of times mom and dad help them, or with their siblings. You are able to do that. Yes. That's allowed in as a part of the down payment.
Okay. And even though if these gifted funds are coming, let's say, from outside Canada?
Yes, as long as we verify it. So if it's something from dad or mom from overseas, we are able to use it as long as we just show like a 90-day history where the money's coming from. So the banks usually want to know the trail, right? So there's no any money laundering or anything like that. They just want to know where it's coming from. But no, you are able to use it, and it happens a lot. I just had one recently where the client is a student, and his dad gifted him pretty much almost 150,000 gifted. So we are able to use it even if it's a big amount. So it's not just a small amount as well.
Okay, excellent. And question again here, does paying my mortgage bi-weekly really save money and reduce my amortization?
Yes. So that's a good question as well. I get asked a lot where if it's the same mortgage amount and if it's monthly versus bi-weekly, is there a difference? Do I pay it down lower? It does make a difference because in the year, there's 12 months in the year versus if you do bi-weekly, which is bi-weekly payments, how some months have 5 weeks in them. So you're essentially making one full month payment a year. So you're technically making 26 payments, right? 26 bi-weekly versus the traditional 24. So you're making 2 more bi-weekly payments, which it's 1 month extra. So it does bring it down a bit, yes.
Okay.
A lot of people do choose bi-weekly. It depends on your preference. You're able to do bi-weekly, weekly, accelerated, even weekly. I find most people do choose bi-weekly because it goes with their pay as well. A lot of the employees get paid every 2 weeks, so it kind of goes with that as well.
You mentioned earlier about RBC having if for any reason they're unable to get the client approved through RBC alternate solution. Is it the same as a B lender? And what's the difference between A lender and B lender? Because clients feel B lender is not a good option, we should forget it. Here we go. Either we get A lender or we're not getting a mortgage. What do you think of that?
Yes, that's a very good question. Just give me a second. I'm just putting my charger in before it dies out. Sorry. All right. So a lot of times where the client, might have a low credit score, or they're self-employed but they're able to put 10% or 20%, we are able to give them that option where they don't fit the criteria to meet one of the A banks, where they would need to go to a B lender. Now with a B lender, the good thing is with RBC is it's still under the RBC umbrella, where you would get a lower rate even through a B lender, and the goal is to bring them back after a year. So it's not like a 5-year term or going private or anything like that, where the rates can become crazy, but where you go for 1 year. So it's a 1-year term. You go with the B lender, you fix what needs to be done, whether, income needs to be adjusted, wife will be working in a year, you'll be putting more of a down payment, you're working on your credit, whatever the case may be, you come back after a year. So an RBC is proactive with that, where I would get the notification from head office. Okay, Mr. Feras, he's up for renewal in 3 months. Give the client a call so we can bring him back, and he gets back the A rate. So he comes back, he gets the A rate. We cover his switching costs, so even the lawyer fee, the discharge fee, the appraisal fee, everything gets covered with RBC. So that's very good, and it happens a lot where the client might not qualify now, but it's a one-stop shop where we already have the documents. We send it to under our B lender channel, so it's not like now you're scrambling again. You got to explain the whole process to another mortgage specialist or another bank, and They have to do your credit check, etc., etc. So this is good to happen where it happens where, and the rates are lower now with the B lender. So it's not even that bad where you're like, oh my God, my payments are going to change dramatically. It's like, it might change maybe $100, $150, but at least you're guaranteed a mortgage. You're getting into the house you want. You're only putting a little bit of down payment. That happens a lot even with some of the self-employed where they can't put 35%. It's a big down payment for them, but they're able to put 20%. They save that, extra 15%. It could be 70, 80,000. But now they're getting a low rate. They are coming back under the RBC umbrella, and 1 year they come back and they get an A rate. So it's a solution that we have for the client. We always try to get them with RBC first. That's our goal. If we exhaust our options, we can't. That is an option that we have, so the client doesn't have to go away or get discharged. So at least there's always an option for the client.
Interesting. So basically, the difference between the A lender and the B lender is the rate. Are there like any other fees involved with going with the alternate B lender?
They might charge like a broker fee. It might be like a small portion, but this is done like through the proper channel, and it's not that much. I don't believe it is. Like a lot of clients do use it, but they're saving money. If they're putting a couple of thousand versus not putting 80,000 in down payment. No, I'd rather go. I'd rather pay that couple of $1,000s.
Very valuable information. Thank you for sharing and reminding the viewers again, if they are having any questions, please post them in the chat. If you're liking the discussion, please type yes in the chat and turn on your notifications so that we'll be having these talks every week. If you have any subject, any topic you want us to talk about or bring an expert to talk about, please type in the chat what you'd like us to, what topic you'd like us to do next week. I don't have any more questions, Ahmed. If you, I think we've covered almost everything. Let me see here. I have one more, I think. No, I guess that's most of the questions. You've answered them for us. Thank you so much. Great information, and looking forward to similar discussions later on. And thanks again for joining us. If you would like to again reach out to Ahmed and have other questions or have a specific scenario you want to discuss with him one-on-one, please text him or email him, ahmad.omar@rbc.com, correct?
That's correct, yes.
And your phone number?
647-524-7722. You can contact me on Facebook, LinkedIn, or Instagram. And yeah, a lot of people, they have similar unique situations or they want to discuss it. Absolutely, this is very normal. And yeah, give me a call anytime. We can look at your situation and we can see how we can help. Absolutely. That's what we're here for. We want to make sure that you know exactly what you're getting into and how we can help it make your someday happen. Absolutely.
Great. Thank you so much again. And thanks to all the viewers, and we'll see you all soon.
No, thank you. Thank you for having me. And no, that's great. There's a lot of valuable information. I'm sure a lot of the viewers they should be appreciative of you doing these, different categories and different things. So, no, it's great. Thank you for having me.
Sure. Thank you. Thank you.
Thank you. Thanks, guys. Have a great one.